Hi everyone, so welcome to the stream today. Very much excited for having you today. And today I'm going to be lecturing, so you can see my board face with a backdrop on evaluation of financial performance and financial position of entities in relation to that, or assessment of organizational performance. So if you have any questions, you know how we do it. So you comment below with your questions. I'm going to be answering all your questions for you. So comment below with any questions that you have in relation to that. I just finished with a live stream on our YouTube channel where I discussed the issue about the fundamental principles of ethics. That is the International Ethics Standard Board for Accountants, or the ICAG Code of Ethics, integrity, objectivity, professional competence and due care, confidentiality and professional behavior. We went into detail to discuss these things in relation to that. So after this stream here, you can also go and watch that in relation to that, so you can prepare for your examination well. So you comment below with any questions that you have for me today, and I'm going to be answering all your questions for you in that case. So I'm going to be answering all your questions for you in that case. So let's see. So you share the stream and let's reach as much students as possible. Okay, watching the stream together. So share the stream and let's see if we can reach many people to watch the stream. And you comment below with all your questions as well. As I'm teaching, I will be answering your questions also for you. So you comment below with all your questions. I'll be answering your questions for you as well. Okay, so you comment below with any questions you have, and let's see what we can do today as we continue with our discussion in that case. So share the video and let's reach as much people as possible. And if you have any questions, you know what to do. You comment below with your questions. I'm going to be seeing your questions, and then I'll be replying to them and answering them in relation to that. So you comment below with your questions as we begin the broadcast today. Right, so one of the fundamental or critical issues when it comes to dealing with the issue about assessment of organization performance or evaluation, this is a topic that is in management accounting. So for those of you doing management accounting, that's a key topic there that definitely the examiner is going to be throwing at you. Then if you are doing strategic case study, you're going to be needing the module I'm going to be explaining here also, because it's very critical, it's very important in relation to that. And even if you are doing financial reporting, there is something about my explanation today on this topic that is going to assist you in what you are doing and how you can prepare and study for the examination in relation to that. So comment below with any questions you have, and also share the video as well. We are looking at assessment of organizational performance in relation to that. Now, one thing you have to understand is that when it comes to assessing organizational performance, there are various ways through which we can assess organizational performance. Now, holistically, if we want to assess an organization's performance, we can assess it from a financial perspective, which is the traditional way. So from the financial perspective and also from the non-financial perspective. So we have the financial perspective and the non-financial perspective. And I'm going to be starting with these two in relation to that. So when it comes to the financial perspective, this is where you know already we use the ratios, interpretation of the ratios in order to what? Assess the financial performance and the financial position of the organization. So this is where the FR students show their powers here, where we're going to be calculating the profitability ratios, the liquidity ratios, the gearing ratios, the investors ratios, because we want to assess the financial performance and the financial position of the organization. Traditionally, the starting point for every organization is that when we are assessing organization's performance, we look at the financial perspective always, because we look at the financial statements. How much profit did the company make? What was its cost of sales? What was its gross profit? How much dividend did it pay? What is the liquidity level? What is the gearing level of the company? Is it going up? Is it coming down? Is the company doing well? Is the company not doing well? So traditionally, if we are assessing the performance of an organization, the starting point always is to look at what? The financial performance. But you have to always be careful not to be deceived by the financial performance of the organization, because the fact that, yes, from the financial perspective, on the face of the financial statement, we are doing well, we are profitable, we are paying out huge dividend, our gearing level is not getting out of hand, and we are doing well on the face of the financial statement, does not actually mean everything is fine. So in order to have a holistic understanding and also to assess the organization in total, there are other non-financial indicators that we have to use in order to assess the performance of the organization. Because the financial performance alone cannot give us a full understanding of how the organization is doing. But there are other non-financial indicators that can be used to assess the performance of the organization, and you're going to be seeing the linkage in a moment. One of the financial indicators, non-financial indicators that we have to look at, it's about our customer satisfaction. So we have to assess whether during the year, what is the satisfaction of our customers? Did we satisfy the customers very well? Did we service them? Because among other things, customers want a few things: quality products at affordable prices, and they want after-sales services. Were we able to provide them that very well? Because remember, if this year we are profitable, if this year we do well, if this year we are able to do as much as it is that we are supposed to do, and we are paying out a lot of dividend to the shareholders, and shareholders are happy and customers aren't satisfied, that is going to be affecting our future performance as an organization. So we have to undertake customer survey, look at customer feedback, read the Consumer Protection Agency's reports on our industry, on our company, and read various analyst reports on our performance in terms of the customer. So that is also one of the ways that we can assess was the performance of the organization, and that is a non-financial indicator. Not only that, we would also have to assess our internal controls or the internal business processes. Okay, we have to assess our internal business processes. So what is the efficiency and how efficient and how effective are we during the year under consideration? So that is something that is very critical, something that is very, very important that we have to look out for. So the internal business processes, it's something that we cannot overemphasize, something that we cannot overlook, because definitely we would have to find out how is our employees, or how are employees performing, our internal control systems, our accounting systems, our equipment, our machines. How are we doing generally in relation to that? Because that is very, very important, and that is very, very critical to an organization in relation to that. So we have to assess the performance of the organization, how management is doing, what is the labor turnover, what is the productivity of our machines, what is the capacity of our machines. All of these are very critical and things that we have to look out for in relation to that. Then the third thing that we got to look out for is the environment. The environment, very, very critical in relation to that. So we need to assess at the impact that we have had on the environment, corporate social responsibilities, and various things. So, you know, entities obtain their resources from the environment. So if we obtain our resources from the environment, what have we done in order to sustain the environment? What have we done in order to replenish the environment? What have we done in order to protect the environment for future generations, for the next generation, in relation to that? So when we are assessing the organization's performance, it can do well financially, but if the organization is affecting the environment, polluting the environment, doing harm to the environment, then the organization will not stand for long. Because even though this is not really well in Ghana, in most part of Africa, in America, Asia, and then Europe, it's something that is critical there. If you're a company that you are not environmentally responsible, before you know it, your share prices are falling. Before you know it, people are demonstrating on a high level against you. Before you know it, you are out of business already. If you pollute an environment and you're not careful, people will take you on, you will pay fines, and before you know it, you are collapsing and you are folding up in relation to that. So when we are assessing the organization's performance, we have to look at the impact that the organization has made on the environment and what the organization is doing by itself in order to improve upon the environment. So that is also another non-financial performance indicator that we have to look out for. Then the last thing has to do with whether we are actually developing and innovating as an organization. So innovation and development as an organization. Because remember, if you're a champion today, that doesn't mean you will be a champion tomorrow. And this is very, very critical when it comes to organizations' performance. So this year, we could record a profit of 10 million Ghana cedis. Does it mean next year we're going to be doing that? No, maybe this year we recorded that profit because we were efficient. If we think that we become the best people, so we know we're not going to innovate, we're not going to do new things. You remember, we are now in a flexible environment. Remember, this coronavirus thing has changed how business is supposed to be done. People who thought that there are many companies that are folded up because they couldn't adapt, they couldn't change in relation to that. Now, since the organization is in a dynamic environment, one of the things we want to assess is whether the organization is innovating, whether the organization is improving, whether the organization is making various decisions in order to up their game. So if our customer satisfaction survey shows that customer satisfaction is 58%, how do we improve that to 98%? Now, it's impossible to satisfy our customers, but the higher the satisfaction rate, the better it is for the organization. So if, for instance, we are an educational institute and we have, let's say, 70 students, and out of the 70 students, maybe 2 people are unsatisfied with our service, it's not a big deal. 68 people are satisfied, and that is a big thing, because everybody, we cannot really satisfy everybody in relation to that. So these are the way that we assess the organization's performance. So if we want to really assess an organization's performance, we must come from the financial perspective, which is the traditional way of assessing the performance of the organization. And financial reporting, management accounting students, you are very solid on this thing. Then we have to also look at the non-financial performance indicators by looking at the customer perspectives, looking at the internal business processes, looking at the environment, and also looking at the issue about innovation and improvement in relation to that. So if you have any questions, you know what to do. You put your questions in the comment box, maybe questions in relation to what I'm teaching or questions outside what I'm teaching. I will be answering all of your questions for you in order for you to understand and prepare well for your examination. So let's go then. If these are the indicators, key performance indicators or preambles that we can use to assess the performance of an organization, then the big question we ask ourselves is, okay, what modules can we use in order to assess the performance of the organization? Because there has to be a module. Now, depending on where we are standing, among other things, there are 3 key modules that can be used to assess the performance of an organization. And today we'll be focusing on maybe 1, and then we will continue with a discussion as we proceed in relation to that. The first module is the Balanced Scorecard by Kaplan and Norton. All right. The second module that we can use is the building block module. The building block module by Fitzgerald and Moon. And then we can also use the triple bottom line. So these are the three key modules that we can use in order to assess the performance of the organization. The Balanced Scorecard by Kaplan and Norton, which is what we're going to be spending our time on today, and then the building block module by Fitzgerald and Moon, and then the triple bottom line. So let me give you an idea about the two, as I'm not going to be talking about them today. Now, with Fitzgerald and Moon, what happens is that the Balanced Scorecard sometimes may not be used, may not be able to be used by a service organization fully. So the building block by Fitzgerald and Moon is actually an evolution of the Balanced Scorecard by Kaplan and Norton, where we looked at dimensions. So there are 7 key dimensions that we're going to be using to assess organizational performance. And once we know the dimensions in relation to the determinants and the results, what the entity has done in the past and what the entity is going to be doing in the future, then we'll be able to set some standards as an organization. And when we are setting standards, we have to take into consideration ownership, achievability, and then equity. And then definitely after we set the standards, we must put in place some reward systems that should be able to commensurate with the standards to enable people to know exactly what they are going to be having when they achieve the standard for the organization in relation to that. So that is the that is the building block module. We'll be looking at this in detail probably tomorrow as we continue with our discussion in this case. Now, you'll realize that the Balanced Scorecard and the triple bottom module does not talk about the issue about the environment. But if you remember our earlier interpretation, the environment is very, very critical. So the module that is able to encapsulate the impact of the organization's performance on the environment is what we refer to as the triple bottom line, where we look at the 3 P's of performance evaluation, where we talk about profit. That is just like the financial perspective. We talk about the people. This is customer, our customers, these stakeholders generally, management and all of that, customers, people, employees, all of that, shareholders. And then we talk about planet, which is the impact of the organization's performance on the environment itself in relation to that. So these are the 3 P's of performance evaluation. And as you can see, this one talks about the profit, which is coming from the financial perspective, people, which is coming from the internal business perspective, as well as the customer perspective, and then the planet, which talks about what the environment, which is something that is very, very critical if we are a company that is environmentally responsible in relation to that. So these are the 3 key modules we're going to be using to assess the performance of the organization. But today, we're going to be first looking at the Balanced Scorecard by the Kaplan and Norton. I believe you are following the lecture so far. If you have any questions, put them in the comment box. I'm going to be reading all your comments and whatever question, whether it's about what I'm teaching or it is not about what I'm teaching, I'm going to be reading all your comments and be answering your questions for you right here on the stream. Right, so let's go to the Balanced Scorecard. So let me put a diagram, sort of a diagram on here. And I'm going to use this diagram to just explain my point on the Balanced Scorecard. Okay, so I see a comment from Chino. Good evening, sir. Hope everything is cool. Yeah, Chino, I believe you are also doing well. So if you have any questions, you put them in the comment box. I'm going to be reading all your questions and then we'll answer all of them for you. And remember to share the video, okay? So share the video, hit the share button, and you can also host a watch party of it on YouTube, on Facebook here, so that we can reach many people to join and watch the stream. All right, so share the video for me and let's get to many people watching the stream. So this is the Balanced Scorecard by Kaplan and Norton. So I'm going to use this diagram to explain the scorecard. I'm going to use this diagram to explain the scorecard. Now, the first thing always, it's about what? The finance perspective. The finance perspective. Now, the financial perspective, according to Kaplan and Norton, simply measures or looks at the issue in relation to the profitability of what? The organization. So this is about the profitability of the organization. That is what the Balanced Scorecard is about. All right, so I see another question from Ikiru Uche. He said, please, Nhyira, can you explain the Porter's diamond for me? Okay, definitely. I will do that. I will do that. It's one of the modules that I'll be looking at in the series as we continue, because now I want to be explaining some of these modules on the live stream here. So when I finish with the Balanced Scorecard, I would look at it, maybe if not today, tomorrow in relation to that. So Uche, I'll be doing that. It's actually part of the list of my modules that I have written here. See Balanced Scorecard, Fitzgerald and Moon, Porter's Generic, Pesto Framework, Porter's Diamond in relation to that. So let's go through our question. Let's see. Did I say question? So finance perspective. Now the finance perspective looks at what? The profitability of the organization. Now the financial perspective tries to answer the question, how do we appear to our shareholders? How do we appear to our shareholders? Because remember, at the end of the day, how do we appear to shareholders? To shareholders. So because remember, at the end of the day, what are we looking for? We are looking for, shareholders are looking for what? Profit. So the question we need to ask ourselves is, are we making as much as profit as possible as a company? So how do we appear to the shareholders of the organization? That is the finance perspective. So this is where you are going to be using various indicators like the profitability ratios, you know, the ROSI, okay, the asset turnover, the gross profit margin, the net profit margin, the sales to the working capital ratio to measure the profitability of the organization. We measure the liquidity of the organization as well as the gearing ratio of the organization. So that is the issue about finance perspective. Now, mostly, this is not really an area that we worry too much about, because it's something that we know already, we do already, and we assess the organization's performance from that angle. So from shareholders' perspective, how are we doing? Are we doing well or we aren't doing well? Are we profitable or we are not profitable? Can they trust us, reinvest their money, or keep their money, or they will go and sell their shares? How are we appearing, or how do we appear to the shareholders of the company? That is what the finance perspective is about. That is very, very important, and that is very, very critical in relation to that. I see another question from Chino saying that I'm having a problem with difference between deferred income and deferred expenses and their treatment. Deferred income and deferred expenses and their treatment. Okay, so I will address that for you as I move on in relation to that. So let's see. Now, after we understand the customer perspective, we come to the next one, and that, financial perspective. We come to the next one, that is what? Customer perspective. Now, the customer perspective looks at customer satisfaction. Okay, so customers' satisfaction. In other words, how do we appear to our customers? Are we able to satisfy our customers as an organization? Remember what I told you earlier on, customers want what? Quality products at affordable prices. Now, affordable is relative, okay? Because what will be affordable to me may not be affordable to you. What will be affordable to you may not be affordable to me. But quality products at affordable prices, and then they want after-sales services. So how do we appear to our customers? Now, why is this thing important? Why is it important for us to assess customer perspective, customer satisfaction? Why do you think we must know about whether our customers are satisfied or not? Now, let me answer that question by giving you an illustration. Let's say that I am a teacher, okay? So let's say I'm a teacher. Not that let's say I'm a teacher. So let's say that I teach 10 students. Okay, so let's say I teach 10 students. And the 10 students that I teach, I charge them, everybody is paying maybe $2,000. So it means that I'm making $20,000 as a revenue from these 10 students. And let's say that the cost I will incur in teaching them, it's somewhere around, let's say, $7,000 or $8,000. So I'm making a profit from this deal of what? $12,000. From financial perspective, I'm profitable. It's a good news. But let's say that the 10 students that I'm teaching, now I want you to follow me very well here. Let's say that the 10 students I'm teaching, 8 of them aren't satisfied with my teaching. Okay? Let's say 8 of them aren't satisfied with my teaching. Now, if 8 of them aren't satisfied with my teaching, what does that mean? So, for instance, as part of the deal, I told them that, hey, when I'm teaching, you can send me questions. I can assist you to answer your questions. I will help you, and I'll do this. And I am not doing the thing that I said I would do for them, for 8 of them. Now, they complain, they were not satisfied, but they've already paid the money, so they go. Now, do you think that these 8 students will tell something good about me? No, they will not say anything good about me. They will not recommend me to their friends. They will not recommend me to their colleagues. They will not recommend me to their loved ones. And even they hear somebody coming to me, they will say, hey, don't go to Nhyira. Why? Because they were not satisfied. However, now, what it means is that the future profitability, future revenue of my company, it's in jeopardy because it is going to be affecting us. What if we turn it around? I provide them with a quality service. It's affordable, $1,000 is affordable, and I provide them with everything that they need, every guidance, every assistance that they require in order for them to study and prepare well for their examination. I provide them with that. What do you think will happen? They will be highly satisfied. And once they are highly satisfied, what will they do? They will recommend. They will tell people about it. Hey, I know this guy in Nhyira. He's very good. He helps you. Even if you don't understand anything, you can call him and he answers. You can send him the question and he's able to help you to solve it. What have we done? Customer satisfaction. That is the thing. But the big question we ask ourselves is, how do we assess, how do we appraise customer satisfaction? How will we be able to have an idea whether our customers are satisfied or they are not satisfied? Whether our customers are doing well or see us that we are doing well or we are not doing well. There are various ways through which we can have this customer satisfaction. And the first way is to undertake a customer survey. The first way is to undertake what? A customer survey. Some companies undertake a lot of customer survey in relation to that. How will we be able to have an idea whether our customers are doing well or see us that we are doing well or we are not doing well? There are various ways through which we can have this customer. So a customer survey. So a customer survey is where we can send out questionnaires. We use Google form or hardcover forms, and you know that when you go to some hotels, like after you're leaving or you go for an event somewhere or something like conference somewhere, realize that after you're leaving, there is a form given to you and you fill it out. It's customer survey. They want to get a feedback. You rate the service. You talk about what is you like, what you didn't like, what they can improve, what they can work on as a company in relation to that. So that's a customer survey. That is one way we can get an understanding on that. Then customer feedback, very, very important. Customer feedback, because customers are going to talk. They are going to call us. Hey, Nhyira, how are you doing? Nhyira, why is this thing this? Nhyira, why is this thing? So the feedback that customers give to us, sometimes not from the survey, but as a result of them dealing with us. Oh, your service is good. Oh no, your service is poor. So whatever they are saying to us, we will be able to assess whether we are satisfying the customers well or we are not satisfying the customers in relation to that. Then also another way we can understand the customers satisfaction is sometimes to read reports on the industry from the Consumer Protection Agency or other organizations that represent the consumers, and various reports that are in the news about customers. We can also get an idea of whether we are satisfying customers enough or we are not satisfying the customers. Like I said, why is it important to satisfy our customers? If we satisfy our customers, all other things being equal, they are going to be bringing more businesses to us. They are going to be buying more from us. They are going to tell a lot of people about us. When that happens, our revenue goes up. When our revenue goes up, boom, what happens? We're going to be profitable in relation to that. But the big question we ask ourselves, let me sip some water. The big question we ask ourselves is, okay, how do we increase customer satisfaction? How do we make sure that all our customers, to some extent, are satisfied? How do we make sure that we reduce the number of customers who will be losing from year to year? How do we do that? The only way we can satisfy our customers well, in order to increase our revenue and increase our profitability as an organization, is to look at our internal business processes. So follow me here very well. I hope you are getting the linkage, because this is very, very important. These things are not just in isolation. The internal business processes, very, very important in relation to that. So the internal business processes simply looks at the efficiency and effectiveness of our internal processes. The efficiency and what? Effectiveness of our internal business processes. So as an organization, how efficient, how effective are we? Now, when we talk about the internal business processes here, we are talking about our internal controls generally as a company. Because if our internal controls are efficient and they are effective, what is going to be happening is that we will be able to what? Produce a quality product at an affordable prices and do after sales services for our customers. So certainly we will be able to satisfy what? Our customers. And since we will be able to satisfy our customers, our profitability will also what? Go up in relation to that. So internal controls, how efficient and how effective are they working? Among other things that we assess in relation to internal controls here, we are looking at issues such as the employees of the organization. So we're going to undertake employee appraisal. I believe the company you work for, that is if you work, you do employee appraisal. It could be monthly, sometimes it could be weekly in relation to employee appraisal in that case, because it's fundamental, it's something important. So we will be able to assess employees' performance, whether they are productive, they are not productive, they come to work early, they don't come to work early, how many leaves they take, and all of that. So we appraise our employees. Along with our employees also, we have to also look at the employee turnover. Okay, turnover of employees is very important. That is the rate at which employees leave and their replacement. Because if people are leaving our organization every now and then, it means we are not effective, we are not efficient. Because if we train them, they know that the way to satisfy the customers well, they leave. So we have to bring on a new person who will not be able to satisfy the customers very well. And definitely that is going to be affecting our profitability, because we'll be incurring a lot of cost in training and developing of these new employees all the time. So we have to assess the employee turnover. Then we have to also assess the productivity and efficiency, if we are a manufacturing company, of our plants and equipment of our productive capacity as an organization. If we have a machine and the capacity is 10,000 units, it can produce 10,000 units every day, and we are only producing 7,000 units or 8,000 units every day, it means that we are underutilizing the asset. If we are underutilizing the asset, it means that it is not efficient enough, we are not being effective, and that will mean that we will not be able to be producing more in order to enjoy economies of scale, thereby producing quality products at affordable prices to the customers to increase the customer satisfaction. So our production capacity is also something that we have to look out for as an organization in relation to that. Not only that, we must also look at the internal procedures that we have put in place as an organization. So what are the internal controls that we have put in place? What are the internal procedures that we have put in place as an organization? We have to look at that one as well if we are addressing or analyzing the issue about the efficiency and effectiveness. So if, for instance, we say that before we give any credit sales, it has to be authorized by the credit control officer, and we have to look at the credit worthiness of the customer before we sell any goods to the customer. Is that procedure actually working effectively and efficiently? We have to assess that. That is what we mean by the internal business processes in relation to that. But like I said, if all of these things are working well, our employees are working well, we are praising them, there is a low labor turnover, we are satisfying the employees, they are well fed, they are well-being, everything is working very well, our internal controls are working very well, customers. So for instance, let's say our customer service department, there are 500 customers that who brought a complaint against our products every month. 500 customers. Let's say that the customer service department was able to channel only 100 of those complaints to the various departments to be dealt with. Do you think the customer service department is doing well? No, they are not doing well. They are not efficient. They are not effective. Because if we receive 500 complaints and you process only 100 of them, then what are you doing there? Because you are employed as a customer service personnel to deal with some of these things. So if 500 complaints came but you were able to channel only 100 of them, it means you got to be sacked. It means you're not doing well. Because the 400 people every month that we are not able to attend to their need, will going to affect the customer satisfaction level, and certainly that will affect our revenue as an organization. That is why it is very, very important for us to understand what is happening when it comes to the internal business processes. And according to Kaplan and Knowlton, we must assess the efficiency and effectiveness of these things in relation to that. Right, so what are we saying? If we have our internal business processes and they are working efficiently and effectively, all right, then all other things being equal, we will be able to what? Satisfy our customers. If we are able to satisfy our customers, all other things being equal, it means there will be increase in the profitability, there will be increase in revenue, and certainly our shareholders will be happy in relation to that. Any questions, you put it in the comment box, and remember also to share the video with others so we can reach as much students as possible discussing this module in relation to that. Now, the last perspective is the learning and innovation. The question we ask ourselves is, the fact that we are effective and efficient today, does it mean we will be effective and efficient tomorrow? And the answer is no. Why is that? Because, like I told you earlier, the organization is living in a dynamic environment. It's a rapidly changing environment. Like coronavirus, it has changed how businesses are done now. It has changed how schools, schools are required to do exams, and many schools right now or universities right now have an online examination, or are having online examination where students are given 24 hours to do their work. All right, because that is how long they give, 24 hours, so that student can do the work and then submit the assignment, and the system will close in relation to that. So the fact that you are a boss today, the fact that you are efficient today, the fact that you are doing well today may not mean you will be doing well tomorrow. So Kaplan and Knowlton suggest that another perspective that we need to look at is innovation and what? Learning perspective. This has to do with whether during the year the entity took any decision in order to improve upon the efficiency and effectiveness of its internal processes. Very, very important. Whether the entity took time to look at the efficiency and effectiveness of its internal business processes. That is the learning and innovation. But how can we contextualize this and talk about it very well? Learning and innovation will answer questions such as training and development of employees during the year. Now, there are some companies, at least every 6 months, they train their employees. Every year, they take their employees to train and develop them. It can be an in-house training, or sometimes it means furthering your education, going to do your ACCA, your ICAG, going to do your master's or your PhD, or doing something, or going outside and doing some mentorship program, training and development. That is learning and innovation, because if we don't train, if we don't develop, if we don't do something to our workforce, they will be stale, because things are changing. They must know the new ways that things are happening in relation to that. For instance, many institutions, especially in Ghana, schools are not able to run because they did not they were doing well with internal business processes, but they forgot the issue about technology. So when now coronavirus has spiked and they've not built the capacity to be able to teach online, to provide distance education, it becomes what? Challenging. So this is putting a lot of institutions on the spot that, hey, we've got to build the capacity for that. So training and development of our employees to be able to use gadgets, to be able to use tools, to be able to use new standards and all these things is learning and innovation. It's part of learning and innovation. Then the next thing has to do with whether we are acquiring state-of-the-art equipment. So technology. That is what I was mentioning earlier. Innovation. What is the new way we can render the service? What's the new way we can produce the product? What's the new way we can reach customers? So if customers have to call and give us and call and be on hold like you call MTN or Vodafone. If you are English, press 1. If it is about this, press this. If it is about this, press this. You go through, if you want to talk to a customer service personnel, press 9 or press whatever. You press and sometimes you hold on. It is now that I think they have improved upon it. Now the waiting time is like 1 minute, 2 minutes for some of the telecommunication firms. Why should you have to? First, you can wait like, sometimes they won't even pick and you'll be angry and you'll go away. Why? Because of technology. Why? Because the staff and all of that. So Kaplan and Norton is saying that, hey, if you want to sustain your efficiency and effectiveness and even improve upon it, thereby being able to satisfy your customers very well so that you can increase your profitability as a company, you must leverage on technology. Very, very important. Using the state-of-the-art technology, equipment, devices, because even like production capacity I'm talking about, one thing is about the environment. If we want to reduce how much emission that we cause to the environment, how much noise pollution we make, how much gases we emit into the environment, it means we must use what? State-of-the-art equipment. Okay? We must use equipment where that the toxic gases cannot go into the atmosphere, or there are equipments where plants where yes, the gases are coming out, but it is going to be purified so that the gas that come out will no more be toxic and that will not affect the ozone layer. We must use devices that will not produce a lot of noise. Even in the factory, it's working, but it's not producing a lot of noise. All of that is about the issue in relation to what? Technology. And that is something that we need to look out for in relation to that. Then product development. Okay, so product development and modification. This is where we talk about R&D. That is research and development. Learning and innovation means that companies must invest a lot in what? Research and development. What is changing? What is the new trend? A product that we have be something that people will be looking for in the future. So what is the new trend? What is the new way? We have to invest in research and development so that we can find out how we can improve upon the product that we have, improve upon the service that we are rendering in relation to that. I think one of the companies in Ghana that I love about how they do product modification and product development and their research, it's Casapreco Company Limited. And you see that when it comes to their Alombo bitters, they have it in grades, and you're like, what's the difference in relation to that? I don't drink though, but what's the difference in relation to that? But I'm intrigued with the research and development. Then they have Alombo Gold, Alombo Silver, Alombo whatever, and the branding, the way they do it, and you are like, the same product line, the same product name, but they tweak it a little bit for different classes of people. That is what we mean by what? Learning and innovation. You cannot just produce one product and say that the Alombo bitters, the original Alombo bitters was doing well, but they modified, they did research and development, then they said, okay, this one they added this ingredient, this one they added this ingredient, this one they added this ingredient, and they name it differently, they market it differently, and it is so good and makes the company a lot of money. That is research and development. So we must find out, how do we bring up a new product? How do we even modify the existing products to sell to the various markets? I think our stream broke up a little bit. All right, so once we are able to do this, our profit goes up, and once our profit goes up, it means that, hey, we'll be able to be making more profit as an organization in relation to that. So when we say the balanced scorecard, this is what you got to understand about the balanced scorecard. Remember what I said, they are interconnected. If you develop yourself, you learn, you innovate, you invest in research and development, use state-of-the-art technology, train your staff, everything, your internal business processes are going to be more efficient, more effective. If they are more efficient and more effective, it is going to increase your ability to satisfy your customers, because you are going to produce quality products at affordable prices and be able to render after sales services. And once customers are satisfied, what is going to happen is that is going to increase your profitability and your revenue in relation to that. So this is the Kaplan and Norton's Balanced Scorecard in relation to that. So any questions, put them in the comment box, put them in the chat box. Now you could see that in the diagram that I have here, you see objectives up and then strategy in the middle, because what it means actually is that for everything that we are doing, we are also finding out the strategies that we have to implement in order to achieve our objective as a company. Because our objective as a company is to make profit. Our objective as a company is to increase market share. Our objective of the company is to increase satisfaction of our customers. Our objective as a company is to increase the impact that we have in the environment. So what strategies do we put in place? The strategies we put in place to ensure all of these things is to train our employees, use state-of-the-art technology, invest in research and development to produce better products and render better services to our to our customers, thereby making more profit in relation to that. So that is what you must understand about the Balanced Scorecard. Now there are some limitations about the Balanced Scorecard that you must understand. So you comment below with any questions that you have. There are a couple of limitations you must understand about the Balanced Scorecard. So comment below with any questions that you have in relation to that. Now, what are some of the limitations of the Balanced Scorecard that we can talk about in that case? The first limitation that we can talk about for the Balanced Scorecard is that it's a difficult framework to use in order to assess an organization's performance. Okay, it's a difficult framework because you can see that we are looking at various indicators and various things when it comes to assessing the performance of the organization. You are looking at customer survey, you are looking at training and development of your staff, you are looking at employees, you are looking at your internal controls, you are looking, so it's a huge thing and actually has a lot of things that the entity must look out for in order for us to use it. Because it's difficult to use, there are various ways to interpret a lot of the things that are on the Balanced Scorecard. Because if, for instance, you want to assess customer performance, would you use the feedback you have from the customers or customer survey, or you rely on the report issued by the consumer or customer groups? What do you use? When it comes to the profitability, do you rely on the gross profit margin, the net profit margin, or you rely on ROCE and asset turnover? So there are various indicators. If you want to assess employees' performance, what key performance indicators can you really use in order to get a holistic understanding of whether your employees are working well or they are not working well? So it's very difficult to actually use this holistically. Another limitation also is that it does not take into consideration the environmental impact of the organization. Okay, so the impact that the organization has on the environment, this module doesn't talk about it. Are you getting it? Doesn't talk about it. So the issue about the environment is something that we need to also look out for, but it doesn't consider it in relation to that. Then also we have the issue about because it requires a lot of skills to actually use this. So it is expensive to actually use the Balanced Scorecard holistically in order to assess the performance of the organization in relation to that. So these are the things that we can talk about when it comes to the Balanced Scorecard. I believe that you understand the concept very well. If you are doing management accounting, this is a very critical area. If you are doing strategic case study, this is a very critical area as well that you have to look out for as a student in relation to that. And it's also in other courses and other subjects that you have to look out for. So comment below with your question in relation to that. So let me see some comments that I have here, and let's see what we have there. Chino said, I'm having a trouble with difference between deferred income and deferred expenses. Now, deferred income is simply an income that is supposed to be received, or you've received an income, but you've not rendered the service, like government grants. Government grants is a deferred income, and deferred income is a liability. Are you getting it? Deferred income is a liability because you received the money, but you've not fulfilled the performance obligation. So you were talking about the treatment. So deferred income are treated as liabilities, and for government grants, in accordance with IAS 20, for instance, it has to be split into two. We have the current liability component and then the non-current liability component. The annual grant receivable will go to the current liability, then the balance will go to the non-current liability in relation to that. So that is how we deal with deferred income: receiving money in advance, or receiving an economic benefit in advance when you have not undertaken the performance obligation, or you've not satisfied the performance obligation. Then the next thing we have there is deferred expenses. Like the name suggests, expenses that you are putting into the future. So that will be more or less like provisions in relation to that, if I get you right. So more or less like creating a provision, and that could also be a liability for the organization, because for instance, if we are supposed to do an environmental cleanup, and it's not time yet to do the environmental cleanup, we have to make provision for it. And so in accordance with IAS 37, we are supposed to make a provision for that. And when we make a provision for that, we are going to be crediting provisions, and it will debit the income statement. But if the expenses relates to a property, plant and equipment, or an asset, then we don't debit the income statement. Rather, we will debit the asset account in relation to that. So Chino, that is the treatment for deferred income and then liability. Then Uche asked a question on the Porter's diamond. Like I said, I'll be touching on that possibly tomorrow on the stream here. So you make sure that you watch the stream tomorrow. I'll be touching on that Porter's diamond tomorrow, God willing. So if there are any questions, comment below with your questions. In that case, today we looked at, most importantly, the issue in relation to the balanced scorecard, and I believe that you have understood the principles and the explanation very well. Maxwell Akomia, I see you watching with me. Okay, Nick Peter Kunyanga. Oh, okay. Please, what key areas should I concentrate on? Key areas in what subject? Mike, you gotta be, sorry, Nick Peter. Which subject are you writing, so I can provide you with the key areas to concentrate on? So name the subject, then I can provide you with the areas that you can concentrate on. I don't know the subject you are writing, so I can't. So Nick Peter, you can comment below with the subject you are writing. Then I can provide you with the key areas that you can focus on. So what areas are you writing? If you have any questions, you put it in the comment box, and we're gonna be looking at how we go about that. So Nick, I'm waiting for you real quick if you're still on the stream. Okay, so I guess maybe you are off the stream or something like that. So if you watch it back and then you provide with the key areas, you provide the subject you are writing, I can provide you with the key areas that you have to focus on. So that is where I'll be concluding on the stream today. Thank you very much for taking time to join the stream, and thank you very much for those of you who took the time to share the stream. We see that a lot of you guys have done the sharing of the stream, and it's heartwarming that you are able to do that, so we can reach as much students as possible. So thank you very much for joining the stream today. Today we discussed about the Balanced Scorecard. Remember that I also do live stream on Instagram 12:05 p.m. every single day. On Instagram, I do a live video on Instagram to answer questions and share some strategies with you as well. So if you have questions and you are available 12:05 p.m. on Instagram, you can join me for the live stream, and then 4:30 p.m. you join me on YouTube also for the live stream. Today on YouTube, I explain the fundamental principles, the International Ethics Standard Board's fundamental principle for accountants, and I also answered some questions live. So after watching this, you can head on to my YouTube channel, and the link is in the video and also in the comment box there in relation to that. Then remember to subscribe to the channel and keep following the channel, so because we will be doing a lot of these to assist you in order for you to prepare well for your examination. So that is it. If you have any enquiries also, you can call or WhatsApp at 050-114-9296, 050-114-9296. Now let me say this real quick as well. Some of you guys send us questions for you to be assisted. By the time of sending the questions, like, you cannot send a question and then you say 2 hours time or maybe 5 hours time you are submitting the result, the answer, so we should assist you. I mean, if you have any questions and you want us to assist you on, you want me to assist you on, you have to send a question beforehand, maybe 2 days before, 3 days before. Once you know it's a question you will need assistance on, you send the questions beforehand, all right, so that it will enable us to go through it. But if you send a question and in 2 hours time you want to submit it, and so we have to stop everything we are doing and do it, that will not be possible. So for those of you who message us to assist you on your assignments, on your projects and everything, make sure that you send a question ahead of time so that the team will be able to work on it, because there are a lot of things that we work on. There are a lot of projects that we work on, so we cannot be. Let me connect my Wi-Fi real quick. So you send us the question ahead of time. Now Nana B said, please can you explain to me how to solve company question? Now how to solve company question is I don't understand your question, but how to solve company questions, you must understand the foundation and read through the questions very well. Now when I say read through the question very well, I don't mean read the entire question before you start answering. What I mean there is that take your time, chew the question bit by bit. Okay, you go through the question bit by bit. So on YouTube too, I'll be doing the same thing for you guys. So you make sure that you keep on following, and let's see what we can do in relation to that. So thank you for watching the stream today, and I'll see you same time tomorrow as we continue. Good night. Remember, coronavirus is still here. For those of you who are in Ghana, you know our cases are going up nowadays, and so make sure you stay safe, sanitize your hand regularly, wash your hands regularly, wear your nose masks or face masks when you go out there, and keep social distancing. Very, very important, so that you will not be affected by this disease. And remember to study very well in that case. So thank you very much for joining the stream today, and I'll see you same time tomorrow. Good night.